So last week, as predicted, the stock market absolutely shat its pants. A long due correction. We've seen stocks like Tesla fall 20%, NEO fall 30%, and even the gods that are Apple fell a whopping 8% at one point. And looking at what people are saying in our chat room, on Twitter and also on eToro, it seems there's a lot of confusion in there on what to do. Should you sell, should you hold, or should you just buy more? In this video, I just want to outline briefly why the stock market is falling, what I think you should do, but more importantly, what I'm actively doing to make sure that I capitalize on this market. In fact, it's probably not going to be like your conventional YouTube video. A lot of people are just going to say, hey, everything's on discount, buy lower. And my strategy is slightly different, so make sure you stick around after this. So if you are not new here, you will see that I have got one said microphone in front of me. I'm trying to improve the audio, trying to give you guys a bit of a better experience. So what do you think? Does it sound better? Does it sound worse? Does it sound quite sexual and soothing? And should I speak more deeply and deeper into the microphone and say words that will arouse you, such as moist? But jokes aside, we did just hit 10k subscribers, so I decided to splash out on a semi-decent microphone. If you're a bit of a hermit and have not subscribed yet, then please do so by clicking that subscribe button, turning on the bell. Do me the kindest of kind favors by making sure that like button is turned blue. If you want to support the channel, there's a Patreon link down in the description where you can get some exclusive perks, including the WhatsApp group and even our chat room. But if you don't want to join Patreon, you can simply sign up on eToro, deposit, and make one simple trade. And every Friday, I email out a list where you get free access to the LWT investing chat room. So sign up with eToro, deposit, make one trade, and basically you get free lifetime, that's right, lifetime access to the LWT investing chat room, saving you quite a bit of money. So on to the stock market and why it's crashing and my thoughts on what to do. Well, firstly, I'm thinking about doing a video on what stocks you should buy in a stock market crash specifically. If you want to see that video, let me know down in the comments. But this crash is, I think, slightly different, and I think crash is quite a hard term. I think it's going to be more of a correction short term, but that said, I do expect stocks to continue selling off next week and maybe even a couple of weeks after that. So the first thing you need to really look at in any sort of semi-bear market is what is the reason for the crash? Why is it crashing? Why is it going to the downside? Is it because of a pandemic? Is it because of interest rates? Is it because of unemployment? Try and find as many catalysts as you can before you make a decision. For example, if it was a tech crash, well, just stay away from the tech sector and look for value plays, and you might not, hit a home run, but you shouldn't lose too much money either. Of course, that sounds easier said than done. But coming on to why this market specifically is falling. Well, I think people have started to realize that unemployment figures may look better than what they actually are. The US and in fact the world is actually printing way too much money too fast, and we just need to pay the bill at the end of the day. Jerome Powell said that he will not be raising interest rates, and that means inflation is probably going to stay stagnant and the market is starting to call bullshit. Now, some new investors are going to be thinking, yeah, but if you raise interest rates, why is that necessarily bad for the market? Well, let me put it in very simple terms for you. If you raise interest rates, more people end up saving. The more they are saving means the less they are spending, meaning that the economy is not getting as much cash flow, meaning less jobs. The less jobs there is in an economy, in layman's terms, the worse the economy. So people are starting to see through that. Now, what the US in particular have been doing, because unemployment obviously has been quite low, is just throwing money at the situation. There's not much more they can do. People are laid off, they're unemployed, they need to put food on the table. But going back to corporate, which is what we're more interested in stocks and finance, well, there's a lot of companies struggling. So they're also getting stimulus bailouts. And it's not to thrive, it's just to survive. But this bill needs to be paid at some point. And they will raise interest rates, inflation will go up, and it's going to cause quite a big crash. I think arguably one of the biggest crashes we've seen in our lifetimes. But specifically last week, Jerome Powell came out and just reassured markets, relax, volatile markets are not good, we're not going to raise interest rates, we're going to try and be calm and at least not even look at raising them until employment is back on track. And I think the market is starting to call bullshit. All these SPACs and speculative plays, even Tesla and hype stocks like Apple, Netflix, these companies are way overvalued too fast because every person at home who's been getting a stimulus check, it seems, has been buying companies that they know and love. Companies like Apple, like Tesla, etc., etc. No one's really been buying into utilities or anything of the sort. And because of that, I think some of the big boys, some of the hedge funds have decided, hey, we should lock in some gains here because markets will come crashing down at some point. And I think that's sort of one of the catalysts. Then when you've got every 10-15 minutes Jerome Powell coming out and saying, hey, just calm down, relax, it's sort of double reassuring. It's like being told to shut up when you're not even talking. He's just continuously coming out saying relax, relax, relax. When in fact, I think he should just lock himself in his office and come out when he's actually willing to make a decision. And by decision, I mean obviously raise interest rates. But don't panic, because honestly, I think this will be very, very similar to last year. A V-shaped recovery will come. And the reasoning is they are still printing money. Short term, I do think markets will bounce. They're still printing money and throwing it at the economy. But that said, I'd be very, very careful still when you're looking at buying stocks right now. I think the sell-off really could continue into next week or maybe even the week after. It just depends how quickly they can get these checks out, and more importantly, will checks continue coming after this 1.9? After all, nobody said this 1.9 trillion stimulus is the last stimulus they're going to throw at it. And I think there could be another one along them lines, meaning everyone's going to YOLO GameStop and Tesla. So I do fully expect that these spec plays are going to get a bounce, and we did sort of see that on Friday. Everybody realized Apple's down 8%, and it's bloody Apple. You know, we're not talking about a SPAC stock. We're not talking about Tesla, which is still nowhere near its valuation, in my opinion. We're not talking about NIO, which missed earnings. We're talking about Apple, a company that is one of the biggest companies, if not the biggest company in the world. A company that strives for innovation and will continue to do well. And the best part about it, it pays you a bloody dividend. I think everybody's seen Apple at this great discount, and that's why we've seen stocks like Apple, but more importantly, Tesla and everybody else. Everybody just realized, hang on, stuff's really on a discount today. We should buy up, and I think that's what happened. But that said, I think if we do get a sort of push on Monday, the same thing will happen. The big boys will start taking profits, and to be honest, I've been taking profits in my portfolio as well, and just sort of diversifying. I took a few short positions this week on companies like Twitter, where I think they're a little bit overvalued in the short term. And if I'm wrong, I'm really happy to be wrong. Because if I lose on my Twitter short, it means that the other sectors, the tech sectors that I'm invested in, are going up. So it's sort of in a way a hedge, but an educated hedge. Now in these type of markets, there's basically three things you can do. One is hold and hope, which you should never really do, but majority of people will get away with it, I think, this time around. And by that I mean you bought a stock on the way up, pretty much at the top of the chart. I mean, imagine if you bought NIO or Tesla at the very top. Right now you're sitting in a bit of pain and just going over the logic that, hey, in 20 years time I'll be green, which is just a crazy mentality. But that's option number one. Number two is YOLO. You buy more, you use leverage, you sell your cat, and you just keep buying and trying to get a better average. But what happens then if the stock market continues falling and you run out of liquidity, and then you lose your job and you need to sell at a loss, which happened a lot in 2008 to 2012. And number three, probably the not so popular answer, but probably one of the more educated ones, is be prepared to sell for a loss. Majority of people who are new and watching videos on YouTube looking for financial advice would not be prepared to even think about this option. But really, you should always be happy to take a loss. I took 3 losses in the last week alone. GSK I closed out for not a bad loss. I think it was a couple of grand I lost on that one. But reality is, I was down 10% on the position. So actually, no, sorry, it was more like 4 grand I lost on that one. It just comes to a point where I'm thinking, this could continue going lower. I should just cut it and reassess. I don't want to be taking option number one, which is just holding and hoping GSK goes back to its glory days. So I just cut it, and lo and behold, GSK actually put a bit of a bounce in the last couple of days. But that's the stock market for you. Now, if you're stuck in a stock at the moment, you don't know what to do, my advice would be not financial advice, because of course, this is not financial advice. So please be aware, do your own due diligence when it comes to investing and making any decisions. But if Gary from down the pub was giving you financial advice, he may say something similar to this. The best way to fix a broken leg is to not break your leg in the first place. And by that, I think Gary means is, well, time your entries. Don't chase a stock on the way up, wait for value, and if you don't find value, find patience. From my military days, we had the 6 Ps, and it's found its way into the corporate world as well. And the 6 Ps are proper planning prevents piss poor performance. And in the stock market, there's a further 2, plan on patience. Find a stock you think that's good value, buy it and wait. Have a stop loss in mind, be prepared to sell it at any time, and then just have patience. If you've got the right plan in place and you time your entries, you'll get that good average at the beginning, and then it's just a matter of time before it goes up or down. But have a stop out point as well and be prepared to sell. Now, I know this isn't the video you're probably wanting to hear. If you're stuck on YouTube and you're looking for financial advice, a lot of people are probably in a position they don't want to be in. They're probably thinking, what do I do? How do I fix this red position on my trade? Like I said, there's three options. You increase your average, which can be dangerous depending on the stock. You hold and hope, which in my opinion could be even more dangerous because you're teaching yourself a bad habit. Or you can take the sort of sensible approach and cut the loss and find a better option. But that said, I think you could be cutting it at the lows. So it depends on the stock. But really coming back to the market, in my opinion, I do think the market will bounce back short term. I think when the stimulus comes out, it's going to prop the stock market for at least a couple of months, and we'll see that little V-shaped recovery and everyone will start YOLOing stocks again. But that said, I think it should be a good lesson, and I hope people took the lesson last year when we had that big dip as well, that you need to start planning. I've been buying gold on a regular basis, you know that if you're in the chat room, and I think it's time to start diversifying just a little bit and trying to find some value. We've seen the great rotation where people are pulling out of tech stocks as well and moving into recovery stocks like airlines and casinos and things like that. And now I think we've seen the rotation on the other side because people are thinking, hey, Apple's at an 8% discount. It's a safer company than buying American Airlines or some, Norwegian Airlines if you don't know, have a look at this chart. And I think that's what's happening. I think there's been a rotation out and now a rotation back in, and I think that will happen even more so when the stimulus package comes. What I'm hoping for is a massive crash. Another 10% downside would be awesome for me because I will be looking at adding into some value players. Most of my positions are green because I time my entries and I'm not in any pain whatsoever, and I'm still very, very green in my portfolio. That's what planning does. Plan your entries, don't YOLO stocks. So anyway, what I'd love to know from you is what stock are you currently looking at to get at a discount, hopefully in the next couple of weeks. Let me know that down in the comments. If you don't have any stock to look at, just comment the word down below microphone, because hopefully this sounds much more sexual and sensual, baby. I'm never gonna do that again. I sincerely apologize. Make sure you have subscribed, turn on the bell, and please do like this video. That's it for me. Take care. Peace.